insurance is not a subject that is otherwise taught in school or taught as a part of our culture. So definitely there's a need for more and more customer education, with the government providing 100% entrance, removing, let's put it this way, de-tariffing the entry of insurance investment is expected to give a further push to the sector. There's scope for many more players to come with specialized products as well. So I think Bahroze Kamdin, she's a partner at Deloitte India. She can throw some lights on these kind of trends from different perspectives, business and regulatory and technology. Bahroze, I welcome you to the dais.
Good morning to all, and we thank Banking Frontiers for giving us this opportunity to discuss on trends in insurance. And though we will be discussing this, we want some feedback and comments from you all also as to what you're seeing in insurance industry and what's happening in the insurance industry. So what we feel is these are ideas for today and tomorrow, and the way it's been shaping up, we can only go higher from here, hopefully. So agenda, basically, the insurance outlook in India, what has been there in the last 1 year. What we see, global trends. So Deloitte comes out with a global outlook for insurance every year, and we've taken some pointers from the Deloitte report. And of course, India trends based on what we've been seeing, reading about it, what insurance authority is doing. So as we speak today, what I understand is IRDA is actually having a meeting with CEOs of insurance companies. And tomorrow, 2 days, they're going to be discussing on insurance. So some of those factors also we try to cover. So background, I think Babu and Manoj has already referred to that India is the fastest growing insurance market, and it will soon become the top 5 globally. We keep hearing this even in the GDP growth. So today, at GDP growth, if you look at it, India is at 6.4%, and it's bound to increase to, they're saying 6.5, but the next year's GDP growth is also nearly that only, it's 6.8. The estimate for GDP growth was 8.2. So India is slowing down. However, what we understand is very soon India will take over Japan in financial year 26 itself. So we'll become number 4 in GDP. And then a year later, or maybe 2 years later, before the end of the decade, we'll become number 3. So we'll take over Germany also. Now, a very funny thing happened when we were discussing this, that India is growing. But if we grow at 6.4 or 6.5 or 6.8, will we really achieve that level which we're thinking that we'll become, number that we are talking about? So they said, don't worry on it. Even if we don't grow to the extent that's required, though I think we should, the way we are growing, I think we should be 7% at least. But they're saying, don't worry, even if we don't grow that way, the other 2 countries will ensure that they degrow. So because they will degrow, we will come to that position. So hopefully before the end of this decade, we should be at number 3 as per GDP numbers. And of course, insurance also, we have the Swiss Re report which saying that we are the fastest growing in the insurance market globally within the G20, and by 2028, we should become number 5. So hope for the best. Now, insurance outlook, what I've tried to do is I've tried to pick up certain things from the publicly available databases. And this is all reporting which happens. So this is a new business. And when we look at the new business, generally, why do we look at it? That's the new penetration which will come in. So the new business, if you look at it, life insurance for the month of December, there was a reduction. So 21% premium did reduce for the month of December, if you compare with the earlier month of December 23. But overall, there has been a growth of 9.92%. So clearly, life insurance is something which is growing. 9.92 is not a bad number, considering our GDP was growing at 6.4. LIC share in this is like 57%. So one company has a huge share of the market even today, despite private insurance companies coming into the picture, and private companies' balance is 42%. Now, if you look at the growth of private companies has increased by 13.87%. So clearly, private companies are growing. LIC grew at 7.6% in this 1 year period. Growth in sum assured also approximately increased by 18%. And both were same, nearly same, 17 point something and 18 point something. On an average, it's 18%. Group schemes, group life insurance schemes, which is very surprisingly, private sector, there was a reduction. So I don't know whether that's what you've been seeing the trend in insurance in India, that group life insurance policies, private sector reduced 17%, while life insurance grew 3%, which is very surprising, but I think that's something which you need to look at the numbers and evaluate. When you look at general insurance companies, the growth has been 7.93% as compared to life. And 5 standalone health insurance companies have done better. They have grown at the rate of 20%, 20.96%. And you have the specialized PSUs. One, of course, agricultural, there has been a degrowth. ECGC naturally will grow at 7% considering our exports which are there. Now, when you look at the sector, and Manoj did mention about penetration, it has decreased from 4%, which was there, to 3.7. So penetration generally, as understood, is part of the, what is the insurance share of GDP. And now insurance share, if you look at the complete share of sectors in GDP, financial services has the highest share in the GDP. Around 23% is the financial services share in GDP, out of which if you look at insurance is such a small number of 3.7%. And it's reduced, it has decreased. The global average has been around 7%. So we have huge opportunities in India to catch up on the insurance penetration. If you look at density, of course, this density is being calculated because of our population. We have 1.4 billion plus populations. So naturally, our density will come down, which is the amount of insurance per individual. So, but there has been a rise from $92 US, it's gone up to 95. So density also has increased, but not to the extent of what the world is. And in that also, if you look at it, life insurance density is around $70, and non-life is has increased from 20 to 25. Now, world over, if you look at the total, I think we will not be able to match that because it's in dollars first and foremost. And then you look at the population. So world, they say it should be around 853, and it's 889 is the density, US dollars 889, and ours is around 95. So another thing which came in is renewal premiums is still continuing to be a large part of the total premium. It's around 54%, while new business has remained at 45%. I think this is there just to say that life insurance policy is a major factor of the total insurance premium that we get. And similarly, the assets under management of life insurance companies also is large to that extent. So they did mention that we are growing 7.7% and we'll be reaching 11.2%. We've already reached 11.2%, 11.2 lakh crores of premium in March 24. Non-life premium actually has increased, but it's still not to the extent of life, which we have been seeing in the penetration and also in the density. Now, market comparison, this is an old slide. So I couldn't find something very recent to say what is our market comparison. But in 2022, we were at number 10. Hopefully, we should become at number 5 soon. So this would have changed, but I don't have the present distribution. And US is the largest. If you see US, China, UK, and though this is of 2022, this is not updated. We are now still ahead and will become number 5 by 2028, hopefully. So global insurance outlook, if you look at it, we've seen that certain operating models of insurance companies have been changing or evolving. And that's what we've been captured, and this is part of the Deloitte report. So what we found is there was a higher inflation. And because of the high inflation, and also, of course, we had climate-related catastrophes or events or incidents which happened. So the non-life insurance, there was a huge pressure on profitability because of both these situations. So what the non-life insurance companies did, of course, they had to increase their premium. They withdrew on certain risks which they were covered earlier, and they tried to improve their profitability. And that actually worked. So they found that by increasing the premium and maybe excluding certain risk, the profitability of the insurance companies did increase. In life insurance, it was the other way around. Interest rates kept on moving up, and we've seen that happening. So since the interest rates were moving up, people started saving more, and started looking at avenues where to save. So there was an increase in the saving products of insurance companies. So life insurance actually benefited from the interest rates which increased, and therefore they could actually give more on saving products like annuities and other saving products which were there. What next they realized is there had to be more trust factor for insurance companies. So the report said that reliability is one of the key factors which insurance companies need to look at. They need to be more transparent in how they price their premiums, and they need to build trust and goodwill among the society. So this is one factor that they found that going forward, an insurance company will need to be doing. They need to work in conjunction with other vendors. So it will, I think, in the next week trying to cover. So accessibility, how we are going to reach the population. They said you need to do it along with certain vendors and not by yourself. If you do it by yourself, the cost of penetration will be very high. So they said more than that, it's best to do with vendors, and therefore that you will meet the customer and distribution demands. And resilient. You need to be nimble and effectively adapt to interactions. So clearly insurance companies can't be the way we are insurance. This is the process that we've been following. This is the approach that we follow. I think they need to change their mindset. So behavioral change for the insurance company also is required. Not only policyholders, but also the insurance company. So in the models that they have looked at, of course, we spoke about embedded insurance. They feel that embedded insurance is going to be the way it's going to be done. So the insurance, like we've seen at any point of sale, now we hear about it so often. आप एक ये ले लो तो इसके साथ insurance भी मिल जाता है free. Anything you travel, you'll get something else which is insured. Airline ticket book करो, insurance आ जाता है. So they're saying insurance will be embedded along with certain products, and it will be more at the distribution at the point of sale itself. So this is a model that they've been looking at. Growing middle class in emerging markets, and also declining pension provisions from governments will fuel growth in savings. This is what the study says. So in the next several years, there will be a growth in saving products individually. And growth, but still they said the growth in life insurance premium is expected to slow down in the emerging markets and moderate in the advanced. So one, they are saying we are going to be saving, but the growth may slow down. Many life and annuity carriers are also turning to outsourcing. So when you're doing your model, do I know in India you have an IRD outsourcing regulation? So you can't outsource most of the activities, but maybe this is a global this. They are saying that insurance will look at outsourcing of some of their activities in their business models now. So everything will not be done in-house, it will be outsourced. Advanced technology capabilities, and this, they looked at it both ways. One, for the insurance company to apply advanced technology capabilities themselves so that they can grow faster, use AI and all of that, but they also saw the risk to it. So they're saying, do we have business policies or products which can ensure certain risk which is going to arise because of AI? So there's clearly going to be some additional products that are going to come out because of AI. And then regulators can introduce policies to encourage insurance to underwrite emerging risk. So renewable energy and also on climate change, they are looking at higher risk coming about and therefore new products for insurance companies, but they also want regulators to come with it. I was reading somewhere in UK, it seems the insurance company, the regulators, and of course the policyholders, they are looking at building sustainable houses because property insurance is very high in UK. So there are huge amount of claims which come out because of climate change. And so therefore they have actually formed a sort of a fund which says so much amount will be contributed by each. So government, the insurance companies and the policyholders all will contribute certain amount to a fund which will take care of the building of the property so that it's sustainable and can withstand all the things, all the calamities which may come in because of climate change. And profits of insurance, a low tax jurisdiction. Of course, I'm a tax person, so I always look at tax somewhere in the whole business model. And so this may be impacted because of our new global minimum tax rules. This is an OECD which has come out with a pillar 2 to say that a minimum tax should be paid in the jurisdiction in which you operate or you sell. And therefore, it's a 15% tax rate. So we do have insurance companies just set up in Bermuda, Lobon, where they don't pay taxes. So if they are going to adopt this, then you will see a change in the way this insurance industry will be operating. Now, if you look at the trends in India, Bima Trinity, I think that's going to be discussed today also. This is something which government started, and a very good thing, 3 main products which are there, Bima Vistar. And this is one thing which is very surprising. In India, if you look at it, insurance, you can either do life, you can do general. General can do health, life can do some part of health. But you do have distinction between life and general. And here they are coming out with one product which covers life, health, personal accident, and property. So there's going to be one product going to be issued by a company which will cover Bima Vistar. So they want to reach this to all of them. Then, of course, you have Bima Vahak, people who will reach out to various people, and women-centric, they want to encourage this. And Bima Sugam, that's our platform where you can buy products. So this is one of the points for discussion, is what we understand at today, tomorrow meetings that are happening at IRDA. Then yes, I think Babu also mentioned, Manoj mentioned listing of insurance companies. There is a regulation which has already come, and expectation is that there will be a roadmap which 10 general and life insurance will give. Today in India, you have around 25 general and 25 or 26 life insurance companies. Of that, a very few number has listed. So now there will be a listing happening of insurance companies, and surely because of listing, there will be a huge change in the way they operate. Then IFRS 17 has been in discussion for a very long time. And since finance and accounts, we do mention this. IFRS 17 was to come into effect from 24, 25, got postponed. It was rolled back. Then now they're saying it should come into effect from 27. Some of the insurance companies have started preparing the pro forma profit and loss account and balance sheets to see how it's impacting. And it will impact because you're now going to do valuations as per the real, whatever the market values are, including for premium, plus your cost for premium, plus your investments. And this can have a huge impact on tax because the way tax works today, it looks at the accounting profits. So any increase in accounting profits, especially for life insurance companies, could have an increase for tax also. So IFRS is something which again is going to be discussed and will be rolled out. IFSC GIFT City, huge opportunity, and I think this is the first time if you've seen the budget. So you have good companies being set up and they want to make it a reinsurance hub in IFSC. We have life companies set up over there. We have general insurance companies set up there. We have reinsurance companies set up there. One good change which came in this budget, and it's a unique change because till date, all the IFSC changes which came in the budget from a tax perspective was to give benefit to non-residents. IFSC is an international financial service center which will cater to non-residents. So income which non-residents earn was supposed to be not taxable in India, and they have come out with several provisions for that in Section 10 for exemptions. In this budget, they came out with one provision to say that if anyone who takes an insurance policy, subject to certain small conditions which are there, which were there even for Indian companies, the proceeds that you receive from an insurance issued from IFSC will be completely exempt. And this amendment has come in my normal section which is there. So it so means that even a resident Indian, if you buy a policy through LRS from an office which is there in IFSC, and subject to the condition that it meets the premium 10% of the sum assured and all of that, the entire proceeds that you may receive will not be taxable. So it's a very good thing that till date it was only non-residents who were getting exemptions for income that you earn from IFSC. In this case, because of the way the amendment is done, even an Indian resident could get this benefit of exemption of income from insurance. So, and they've been actually working towards it. There was some event which they had in just the last month on this, on IFSCA. InsurTech, I think Babu Nair has spoken enough. It is the need of the hour to have innovations done within insurance and various sectors. So InsurTech and the intermediaries. So when we'll be having the panel discussion on brokers, we'll discuss on that also to say how intermediaries can help insurance companies increase the growth. 100% FDI, yes, we've seen this 100% FDI, and what we have noticed is when the limits increase from 49 to 74% also, a few insurance companies increase their limits. The foreign joint ventures increase their limits. But the ones who are already into India for a long time have not increased to that level. So there will be a new class of insurance companies that may come into India who want to protect their IP, who want to do business on their own, who will come in as a 100% FDI. So we believe that the number of insurance companies would increase. AI in insurance, we've been hearing this. I mean, it's all there. AI has been there in insurance, and we've seen it being used somewhere in distribution, sometimes in underwriting, pricing to claims. So there has been a use of some AI and new customer segment. I think we're going to be discussing that during the day. But it's a need of the hour if we need to increase penetration. And we need to target 2 and 3. So somewhere government also has come out with certain schemes. You have the Pradhan Mantri Jeevan Jyot Bima Yojana. You have Pradhan Mantri Fasal Bima Yojana. How do insurance company piggyback on these schemes which governments have come out to target audience in tier 2 and tier 3? I think that's something which will have to be seen. And so I end my presentation. And generally, when you look at insurance, I think it's the fear sometimes that makes you take insurance. Sometimes it's the return on it, if it's life, which you look at to say, should you take insurance? Of course, net of tax. But the best insurance, I think, is where I don't get a claim, whether it's a policy holder or whether it's the company. Both don't want claim settlements to happen. So therefore, I think both the insurance sector actually should work towards it to see what they need to do along with policyholders so that the claim ratios keep coming down. And there should be a claim-free society maybe, but still with insurance. Thank you.